Hey guys, it's your big dreamer and doer, G Dinero, and today I'm going to add a new module to the TradingView and Technical Analysis course that I put out about 6 months ago. And today we're going to cover the IA rotation model. The IA rotation model, remembering that none of this is tax, financial, legal, investment advice. It's your buddy G Dinero helping you understand the charts in this case to help increase your financial literacy, to help you and your family move on that path to financial freedom. So, what is some of the highlights that I've captured here of the InvestAnswers model? Now, just so you know, right out of the gates, this is an extremely difficult or complicated model to set up. James and Jacob over at InvestAnswers have called it like flying a 747 jumbo jet airliner, right? This is not your average run-of-the-mill model. It's not something that's super simple. You have to have some experience already trading because there's a lot of different settings that you can set up here along the way. Also, remember, past performance does not indicate future results, right? This is huge. A lot of this model is set up using backtest information. But you can make the backtest look amazing, but will the assets do the same thing in the future, right? What do I mean by this? I personally don't use a lot of backtests because I like to keep my head out the window. I like to keep thinking about where things are heading on a daily or weekly basis, right? But if you're looking back at the backtest results, something like in the example that James used, he put HIMS in there, HIMS. That's a stock. Well, it had a meteoric rise over the last year or so. So that's going to skew the results to the upside. Will it have that same meteoric rise in the future? Will MicroStrategy have a 10x return like it did, depending on at what point you set this backtest to? Will something like Palantir have a meteoric rise also? So if these are the assets that you want to be in the future, what you have to remember is they may not have those same pops, so to speak, as they've had in share price over the next couple of years. They may not have the same ones that they had over the last couple of years, okay? So keep that in mind. You can make the backtest look as amazing as you want, but will those assets that you choose do the same thing in the future? And a second thing is the backtest results. This isn't a portfolio tracker. A lot of people seem to think that they have to put in a certain amount of what they started with 2 years ago and where they would be now. No, this is designed. You set up the backtest to get everything set up the way you like it. And this is designed to start now, start today. And for that, you would need to track it on your own spreadsheet or track your own results from this point moving forward, because the backtest results aren't going to all of a sudden magically restart from today, right? So keep that part in mind with the rotation model. Excuse me, you would need to track your own results moving forward on your own type of spreadsheet. Some other things to keep in mind with the rotation model: it's highly, highly customizable, or tweakable, as I like to call it, right? You can tweak all these different settings in there. Things like the start date, that changes everything. If you put a start date back a couple of years ago, you'll capture all those giant growth rates that we've had since the bottom of the bear market back in 2022, right? So if you set it to January 3rd or 4th of 2023 to present, you'll get massive results with assets that have gone up dramatically since the bottom of the bear. On the other hand, if you set the start date to just a few months ago, well, there's been a lot of sideways or even downwards movement in some of our high-flying favorite stocks that we would put into this, and the results would be dramatically different. So that start date, that's up to you when you want to track it from. There was no real guidance given in any of the manuals or anything that I was able to find for when to start that start date. That's up to you for the backtesting results. But keep in mind, the further back you put it, the more you're going to capture of this dramatic upside that we've had on most of the stocks over the last couple of years. Assets, that's the second highly customizable feature. Pick the assets that you want to be in, not just those that give you incredible backtest results, right? Especially since that's all happened in the past. That goes to the point that I made on the previous slide, right? You can make the backtest look as incredible as you want, but do you really want to hold those stocks moving forward? Are those what you want to build your portfolio on? Or do you want to choose assets that you really want to hold and build a portfolio around that? And I would say it's the latter, quite honestly. Projections, that's the next thing that's highly tweakable. In there, it's everywhere from super bullish to super bearish. There's 8 different settings in between. And there's an auto feature if you want to just let the model auto calculate it for you, right? Now, one thing that has recently come out is that you can use the LILO model on each individual asset to help you set these bullish and bearish predictions, okay? That'll help you get that gold line, and you'll see what I mean when I say the gold line, sloping in a way that you're comfortable with, right? It might be going vertical like this, but is it realistic that Tesla is going to hit $1,000 a share a year from now? It might, and you might think so. But if you go in and you use the LILO model, something more realistic might be somewhere in the neighborhood of 500 to 600 per level 7 or level 8 on the LILO. So again, you can use the LILO model to help you set it up where the price loss cross through the 200-day moving average. That's where you would set the anchor, or to a local low. Let's say it's something that hasn't been anywhere near the 200-day moving average for over a year or two. In that particular case, you may want to go ahead and set it to that local low where the trend last reversed. Same place you would have set perhaps a Fibonacci point, right? When you started making, stopped making lower lows and lower highs and started making higher highs and higher lows. That's a trend reversal. That marks a local bottom. That could be a point where you would set the LILO anchor to. Either that, or like I said, the 200-day moving average. And per InvestAnswers, level 7 or level 8 is a good level to project out to in the future. Again, that's up to you, your judgment. You'll get those levels on there, and then you'll just look at that price, and you have to make a determination. Do you believe it's going to get to that price? Which also, I'll highlight right now, that's another point of this model that I want everybody to be very comfortable with. The model doesn't give you the projections. You have to put in some inputs. It's not like this thing is 100% automated. I know a lot of people, they want InvestAnswers to just give them all the answers. Here you go. Here, put these 5 targets in there, these 5 assets, set everything up in the model exactly this way, and then just follow it blindly. That's not what it's designed for. He designed this model so that you can put your tweaks on it to customize it for your particular needs, because remember, your goals are not InvestAnswers goals, are not my goals. We're doing this for you so that you can achieve your goals that you're specifically looking for. One might be looking for income because they're retired and they need income off of their portfolio. And somebody else may be very young and they're looking for maximal growth in their portfolio and willing to take all the risk in the world because they're young, they just started their career, and they've got years of money making ahead of them. So if they lost it, it's not the end of the world. Somebody who's retired has spent their whole life building this bag and could lose it all in a heartbeat, okay? So that's a little aside, but that helps with the projection side of things. And then finally, you can also change the percent that you want to retain and hold versus the percent that you want to sell. So let's say you want to make sure that you always keep half of your MicroStrategy portfolio or half of your Tesla portfolio. You can set the percent to retain to 50% and the percent to sell to maybe only 25 or 50%. These are not cumulative. It just means that at any given time, the most you're willing to sell is half of what you're holding, unless you're already down to only half of your holdings in that particular asset. Again, going back to Tesla as the example, let's say you had already been told to rotate out half of your Tesla assets, and now all of a sudden it's telling you to do the same thing again. Well, you're only going to sell a fraction, if anything, because you're already down to half of your initial holdings to begin with. All of that is built into the model. We'll go over that as well. A few final thoughts. Don't follow the model blindly. I kind of already covered that. It's not designed as a completely automated model. In fact, none of InvestAnswers models are. It's not like he sells a system that you just go in and you blindly, copy trade him all day long. That's not what this is designed for, okay? You got to keep your head out the window, as Invest Answers would say. Things come up, things change all the time. I threw a couple of examples on here. I used the LA riots, protests. I call them riots as an example, where they were lighting Waymo vehicles, automated vehicles, on fire. Right, 4 of them that they torched right there in the streets of LA, and stood on top waving Mexican flags with their shirts off. Right, claiming that they blew up these cars. Imagine this. Imagine there was a person in that car. And imagine that Tesla had just launched their robotaxi or their automated driving, and there was a person in that car. That car is going to stop if there's a mob in front of them. It's not going to run them over, right? And there's all kinds of things we could say about that, but it's not going to run them over. It's going to stop. If it stopped and there was a person in that car and that car got torched, what do you think that would have done to Tesla's future? Okay, so think about it. Things like that can change everything. That's not on your bingo card per se. Same thing, just last night, at the day that I'm recording this, just last night, the United States flew B-2 bombers over Iran and destroyed their nuclear capabilities by destroying their underground bunkers. Whether you believe in war or not, whether you believe there's nuclear there or not, that is going to have a dramatic effect on the way that the stock market's open tomorrow, Monday morning, okay? So all of those things mean you've got to keep your head out the window. When they're not on your bingo card for 2024 or 2025, you've got to keep your head out the window, okay? And finally, I'll break down all the different settings and tables in the next few. We're going to jump on the charts. I just wanted to give you all this feedback ahead of time so that you kind of knew what you were up against. And lastly, when you see the signals on the chart, keep in mind that they signify what you're going into, okay? What you're exiting other portfolios and or using cash that you have on the side to go into. That's what the signals signify on the charts. Okay, let's dig into the charts. We'll go over there right now. All right, here we are over in the charts. I have TradingView pulled up, and you'll notice that I have MicroStrategy as my primary asset. So first things first, you would need to go here to the where the indicators are. You would go down into the invite only. You would scroll down until you found the rotation model right here. Notice I put a star by it. You would click it. That would add it to the chart. I also have it now under my favorites, and you'll see the IA rotation model is right here in the favorites, okay? And so that adds it onto the chart, and then we're going to go ahead and open it up right now. At the time I'm recording this, they're on version 1.4. So always make sure you're updated to the latest and greatest version of each of these. You'll see here that I have my start date set to 6/22/23. Why did I choose that date? That was 2 years ago. I figured let's just look back at the last 2 years. Remember what we said before, highly customizable. Start date is one of those that is customizable. So in this particular case, I set it to 6/22/23. I could have just as well put it on to February 14th. I'm pretty sure that's what Jacob had his set to when he was doing the rotation model that he put out, the video that he put out. You could put it all the way back to the bottom of the bear market, which would have been November, December of 2022 for most assets. You could put it to just a year ago and take a look at what's happened over the last year. That's up to you. That's going to affect the backtest results. I felt like 2 years was a good bit of time, and it means that I'm not trying to sugarcoat it. I'm not trying to pick the absolute bottom when these things have had meteoric rises. I'm just picking an arbitrary date that's exactly 2 years ago from the day that I'm recording this video. Number one. Number two, you'll note that I have selected as my assets the primary one, which is MicroStrategy. That one is the one that it says here in the middle, selected from chart, right? So right underneath the start date there under number one, it says selected from chart. Whatever my chart is set to is the primary asset that everything else is kind of measured against, right? So MicroStrategy is my first one. Tesla is number two. NVIDIA is number three. So again, to change these, you would just click on them, choose the asset. In this case, I'll just throw it back on there as Tesla. You'll notice that it'll take it a second here to populate the data again. And I'm just gonna reload it. It was all nice and pulled up. There you go. So then Tesla, Nvidia, I put gold down. Why did I put gold down? Because I believe we're going into an inflationary environment, and in an inflationary environment, gold will be king. So will things like other commodities, right? I already have Bitcoin exposure in here. That's why MicroStrategy is listed number one on my assets. But I felt like gold was also an inversely correlated asset oftentimes. And that's what you're looking for, is you're looking for high beta, which gold's not always a high beta, but with the world that we're going into, with wars all being fought all over the place right now, with all kinds of rioting going on, with a reset of the global financial system imminent and on the horizon, and with inflation starting to peak back up again. If you believe a lot of those things, that's why I selected gold. Again, that's my opinion at the time this was made. I also put in CYFRF because later this year, Solana is supposed to have ETFs coming out. If that's the case, then something like the Sol Strategies treasury company should do very well in that environment, right? Something like CYFRF or DeFi Development Corporation, one of these Solana treasuries should do very well when the Solana ETFs come out later in the year. So remember, as we were talking about selecting assets, these are 5 assets that I would not mind holding, not only for the next year, but for the next 3, 4, 5 years, okay? That's why I've selected the ones that I've selected. You could select anything in this case, right? I didn't just select it to make the backtest results look good. These are ones that I'm already thinking into the future. Bitcoin treasury companies are all the rage. Solana treasury companies are just starting to come out. We've got gold in there because I'm worried about inflation and wars and financial resets in the future. Tesla, for obvious reasons, it is the leader in automation, right? With the full self-driving, the robo-taxis, energy storage, and Optimus bots coming out in the future. And NVIDIA, because they're powering the entire infrastructure of AI, and MicroStrategy, because they are basically longing Bitcoin, shorting the US dollar. And since the dollar will be completely printed into oblivion, in my opinion, and Bitcoin has a fixed cap, I believe that Bitcoin's price will go up indefinitely. And somebody like MicroStrategy is the best poised company to dominate what I'm going to call Bitcoin banking in the future. Okay, so those are the reasons why I selected those 5 assets. Then the next thing I need to do is I need to go in and say, what am I starting with? So I just threw in here 100 shares of each. Again, it doesn't really matter what you put into there as far as your starting balance of each, because this is backtest results. This isn't a portfolio tracker. You don't put in what you have right now. You say, what if I started with an equal number of shares? Or you could put in that you didn't start with any Tesla shares, or you didn't start with any CYFRF, right? That's up to you, but I threw in there just arbitrary numbers, 100 of each, because within a few cycles of it having you trade in and out of them, you'll be balanced out the way that you've set up your rotation model, meaning if you've retained 20% of one or 50% of another, etc. So I'm just starting mine with 100 shares of each. Then the next thing that you have to start considering is, what about these projections? These projections in the upper right-hand corner. So this is saying that MicroStrategy a year from now would be 580, Tesla would be 366, NVIDIA 209, gold, GLD 360, and CYFRF will be $3, okay? So part of what we need to know is, what is GLD currently? And I believe I have it over here, XAU. So gold right now is probably, the GLD fund is probably around 336 or something like that. So I believe it might actually go up from there over the next 1 to 2 years. CYFRF, what is it at currently? CYFRF, I've got it listed here. CYFRF is at $1.68. So they're saying it'll roughly double over the next year, okay, to give us an idea. Now, If you guys hopefully remember how they suggested setting this, it was from the LILO. So this is what I'm talking about, is this right here, to set it to bullish or bearish. So you'll notice that MicroStrategy is at 580. If I go very bullish, MicroStrategy is going to jump to 1.2 thousand. And notice in the background, this gold line goes straight vertical. I don't think that's the case. I don't know that it's going to do that. Also, I'm not very bearish on MicroStrategy. I don't believe that a year from now or 2 years from now, it's going to be $0 or $1. That would make that gold line basically go down to zero. I don't anticipate that's going to happen either. So I think it's going to be somewhere in the middle of all those. I'm going to leave it to auto right now. Let the system just go ahead and go back to it. And I'm going to switch over to the MicroStrategy chart and show you how to set LILO. So we're going to come in here. We're going to select, give me a second. Sometimes I have to reload it because I was in there just a second ago. I need to come in here. I need to select the LILO model. So I'm going to go down here and select InvestAnswers. Oh, it's under invite only. LILO model right here. There, it just pulled up. And you'll note that here is the LILO model over here. Now we've got to find where the slider is. So the slider is set into the future, 129, 2026. I'm going to put 2025, and this is the anchor, the infamous anchor, 0310. And that just moved the anchor back into here where I can see it. And what I'm looking for is, where did the price last crossed up through the 200-day moving average? Well, you notice the price dipped below it right here and went back up above it here on Wednesday, April the 9th. So that's where I'm going to set the anchor. Again, this is the anchor. You see me moving it back and forth. Another way of finding that anchor is to just change the date here. That's what I originally did. That is the anchor that we're talking about. All right, so now that I've done that, let's take a look at and see what this is suggesting the levels 7, 8, 9, and 10 are. And this is saying that level 7 is at 661 and level 8 is at 886, okay? So if those are the levels that we should kind of target per what InvestAnswers has suggested with the LILO model, I feel like those are a little bit high in my opinion. Right? That level 8 may be a little bit high for this cycle. So especially if I'm thinking about over the next year. So instead, what I'm going to do is I'm going to bring this from slightly conservative to conservative and see where that brings it down to. And that brings level 8 down to 738 and level 7 to 570. So that's saying that we'll at least break the previous all-time high. To me, that's actually a little bit low. So it seems like slightly conservative is the best for me. 660 makes sense to get to there. 886 may be a stretch, but hey, that's what the model's here for, is to give us a stretch. So in that particular case, we're looking to get the price of MicroStrategy over on the other model to somewhere between 660 and 886, okay? So now I'm going to come back over here to the rotation model. We're nowhere near 660 to 886 for the next 1 year. So instead, I'm going to go in here and I'm going to go bullish. Bullish takes it to 871, slightly higher than I wanted. So I'm going to go slightly bullish. That puts it at 725. 725, again, just going back and forth. 725 is right in the middle of 661 and 886. So for my rotation model, I'm comfortable with that on MicroStrategy. You can literally do that with each one of the assets that you've selected here, using the LILO model to choose those levels in the future, or you can leave it set to auto, which is what it's currently set to. I'm going to set these to just based on my knowledge without going through and doing the LILO for each and every single one of them. I'd say I'm bullish on Tesla over the next year. I think 500 is a good price target on Tesla. I'm also more bullish on what they have here for NVIDIA. They have it at 209. I think 250 makes sense to me on NVIDIA based on things that I've seen. I think I'm going to be slightly bullish on gold. That's maybe higher than what I think. So I'm going to go to slightly bearish on gold. 279. That's, what was it on auto? 360. I'm going to leave it on auto because I only have a choice of slightly bullish or slightly bearish, and neither one of them looked accurate to me, but we'll go with auto on gold. And then on CYFRF, I'm definitely more bullish than $3. I think we're going to get somewhere up near $5 or more. So it looks like I'm going to have to go to more bullish. There we go. More bullish takes it to $5. Okay. So those projections look accurate to me in the upper right-hand corner. Notice that it also increased our results down here, right? I think before, let me just set them back. So that's slightly bullish, bullish, slightly bullish, auto, and more bullish. All right, so if I go back to where we were before, auto, auto, and auto, the rotation model had a result down here of 795. So just by setting a few of these things to where I believe they should be, which I think this one was slightly, that one was bullish, and that one was slightly, if I remember correctly, it takes the results to 834. And the projections in the upper right-hand corner right here are more in line with where I think those projections are going to be, okay? So far, we have set the start date. We have selected the 5 assets that we want to choose and that we would love to hold into the future. And they're not, I didn't just do what James calls asset cloning. I didn't just pick like MicroStrategy and then go pick 4 other Bitcoin treasury companies, right? I picked different assets that should move inversely correlated, maybe not perfectly inversely correlated, but uncorrelated from one another, so that way if MicroStrategy goes on a heater, hopefully it's at a time when Tesla, Nvidia, gold, and CYFRF are not doing as well, right? Why do you say, why wouldn't you want them to do as well? Because MicroStrategy goes on a tear. We're on the fastest horse. The rotation model puts us into it. And then all of a sudden it sees that there's conflict on the horizon. And so it takes us out of MSTR and puts us into gold. And then it sees that conflict on the horizon is going to be resolved and that the SOL ETFs, are going to be coming out in the future, and bang, it puts us into SOL strategies so that we can ride that faster horse, right? So now you see it's designed to continue rotating you from one asset to another. All right, guys, the last thing that we have to set right now is the retention and sell percentage, okay? So on the retention and sell percentage side of things, what do you want to hang on to in the future? Well, I'm willing to hold, I'd like to hold 50%, let's say, of my MicroStrategy at any given time. Tesla, I'd like to hold 50% of my MicroStrategy at any given time. NVIDIA, I want to make sure I'm holding 50%, maybe 40% of my NVIDIA at any given time. Gold, I'm all right trading almost all the way out of it. I'm looking at it as just like a hedge, so I'll drop that down to 20%, and I'm willing to sell up to 80% of that at any given time. And on CYFRF, I'm all right only holding 10% of that because it's the riskiest one in my portfolio, and I'm willing to trade up to 90% of it at any given time, okay? Now, you'll notice that the back test results are 663. And it was 833. And you might say, oh, but now your back test results are worse. I personally don't, it's not the end of the world. 663% versus 125% is still astronomically better. It's a 6x or a 5.5x better, right? 5.5 times better. And I'm comfortable with the amount that I'm trading or retaining at any given time, right? Maybe I don't even want to sell that much of my MicroStrategy or my Tesla. Maybe I'm not willing to put that much at risk because those are my bread and butters. Well, that right there just increased the rotation model results up to 735%. Same thing with NVIDIA. Maybe I'm willing to put a little bit more of NVIDIA at play. So if I go to 75, the back test results went up. So it all depends on what do you really want to hodl moving forward? What's the minimum amount of each of these assets you're willing to hodl? And how much of the assets are you willing to trade at any given time? That will change the results dramatically. So for this example, I'm going to leave it like this. This is saying that at any given time, I need to hold on to at least 50% of the of the MicroStrategy that I have. I'm willing to trade 25% at any given time to put 25% into the cash that I need to rotate into whatever the other asset is if it's not MicroStrategy. In the case of Tesla, I want to hold on to 50% of my Tesla at any given time. I'm willing to throw 25% of the cash into the rotation model to go into whatever the next asset is, et cetera, et cetera. Now, as you go down here, I have the label behavior set on display. I want these labels to display over here on the right-hand side. Number of columns, you'll notice I had already tweaked mine to 5, from 5 to 10. I want to show all of the columns in these tables. We're going to go over the tables in a moment. Page number, I always leave that on 1. That's giving me the most recent trades, basically shown on these tables. Currency, yes. Summary table, this is just where do you position it. So you'll notice I have the summary table positioned middle left. I have the trades table positioned bottom left. I have the projections table up here in the top right. And I have the results table down here in the bottom right. And last but not least, because I am over age 50, I have it set to medium because the small is hard to see. And also because that way you guys can see this as we're cruising along. Cool. We're set. Everything is now set. It's done. I don't need to go back in there and tweak it on a regular basis. Only if these projections all of a sudden look way out of whack. Again, going back to that Tesla example, it wasn't a Waymo, but it had a passenger in it, and it was a Tesla that got a Molotov cocktail thrown in it in LA. And guys, I'm not saying I wish that happened. Thank God it didn't happen, right? Thank God. But I'm just saying that's the keeping your head out the window. The model, it could have happened and it would have taken the model a second to pick up on it because all of a sudden Tesla would have just tanked. It would have tanked at the next possible trading session if something like that happened. Okay. So I'm going to break this down and I'm going to look at, and I'm going to zoom out at what is the first trade on here. So the first trade on the summary table is February 12th. All right, so let's make sure that we can see the February 12th, which is right here. And you'll notice I'll circle it. Right here is February 12th. And that is going to correspond with this and this on the asset sheet, okay, on the trades and on the summary table. So on February 12th, your total portfolio value was $315,800. $315,800. The total amount that you have sellable is $82,500 at the time it tells you to purchase Tesla. Why do I say that the total amount sellable is $82,500? That is based on all of those things that you put into the model when you said I'm willing to sell 25% of my MicroStrategy, 25% of my Tesla, 40% of I think it was NVIDIA, 75% of my gold, and 80 or 90% of my Sol strategies. And again, just to be exact on those numbers, this is what I'm talking about. Whoops. Oh, this is what I'm talking about. 25% I'm allowed to sell if I need to take money out of MicroStrategy, 25% from Tesla, 75% from NVIDIA, 80% from gold, and 90% from CYFRF. Okay? Sol strategies. So let's come back in over here, get back onto the drawing tool. So we said our portfolio is $315,800 in total. I'm allowed to sell up to $82,500. The asset I need to purchase is Tesla. Why? Because remember what I told you. This is called the signal, and the signal always tells you what you're moving into. In this case, it says Tesla. At that time, the price per share of Tesla was $337. I needed to purchase 245.03 shares of Tesla. I was holding at the time 155.327 shares of Tesla. Now my target number is 400. That's the 245 that I'm about to purchase and the 155 that I was already holding onto. Gives me a grand total right here of 400 shares of Tesla. All right, so now let's look down at the trades. At the trades category, I need to sell $47,500 from MicroStrategy. I was sitting on $206,400 worth of MicroStrategy, and I'm selling basically $47,500 of it. I was holding a little over $50,000 in NVIDIA, and I have to sell $34,000 of my NVIDIA. Gold, I was sitting on $6,500 worth of gold, because remember, I'm only willing to hodl up to 10% of my gold at any given time. It's just there literally as a hedge against inflation, right? I'm not saying go out and buy a ton of gold. I'm saying it's there as a hedge against inflation. So $6,500 of gold. I'm selling off about $1,000 of that. And I was only holding on to $28 of Sol Strategies at the time. And it looks like I'm selling off just $1 of that. All right, so now we've got, we've done that trade. We've moved $82,500 from all of these other assets into Tesla. We increased our Tesla position from 52,300 to 117,300. Okay, I hope that part makes sense. I'm going to repeat that again. We purchased $82,000 worth of Tesla. Why? Because it told us to up here. We bought 245 shares at $337 a share. That took our total from $52,300 worth of Tesla to we added $82,500. It took us to a grand total of $117,300 worth of Tesla. Then the next signal came along, and that is MicroStrategy. It said, move into MicroStrategy. We had a portfolio value at the time of $262,800. We have about $34,000 worth of other assets that are sellable at the time. The asset that we need to purchase is MicroStrategy. MicroStrategy is at $255 a share at the time. We are going to purchase 132, almost 133 shares of MicroStrategy. That means that we originally had 486 shares of MicroStrategy, and that will bring our total to 619 shares of MicroStrategy. If I come down here to February 28th, you'll note that we are going to sell off $25,700 worth of Tesla, $8,100 worth of NVIDIA, $191 worth of gold, and no CYFRF because we don't have any to sell at that time. And we're taking that $33,900 and we're adding it to the $124,200 worth of MicroStrategy that we're already holding on to, bringing our grand total to $166,000 worth of MicroStrategy. I'll take it one more step, okay? Actually, I'm going to jump ahead right now, and I'm going to jump ahead to where we have a few gold signals in a row. You'll note right here, 1, 2, 3 gold signals in a row, okay? So the first one of those is the May 13th. So May 13th, right here. Our total portfolio at the time was $437,300. We have $227,000 worth of sellable assets. We're going into gold. That's our target. Price per share at the time was around just under 300. The number of shares to purchase is 757 shares of GLD. We had only 20 shares. We now have 777 shares. Lucky 777, okay? What do you notice with that? At a time when things were starting to broil up, right? Tensions were starting to flare in the Middle East. This is before all the bombs started getting thrown back and forth. Gold sniffed it out, and you're moving some of your portfolio into what's considered a safe haven. That's where gold can help Bitcoin should be that safe haven in the future, but it always sells off first because it's the most highly liquid out of all the assets and it trades 24/7. So it tends to sell off very quickly, right? And anyway, so gold right here, we will go into that. If we track that trade down here, we sold off $33,700 worth of MicroStrategy, $12,300 worth of Tesla, $13,900 worth of NVIDIA, and we had been in CYFRF, guys. We sold off $167,000 worth of CYFRF, and that added $226,800 to gold, added to the $6,000 we're already holding on to, giving us a grand total of $231,600 worth of GLD. Now, let's take a look. On the second signal, the second one is this one right here on May 15th. Just 2 days later, it told us to do it again. Our total portfolio value was $428,700. Our total amount that we had sellable at the time was $52,000. It said to move into gold at a time when GLD was at $298 a share. We have to pick up another 174 shares added to our lucky 777, brings us to 951 shares of GLD. You'll see down here, we took 24,000 from MicroStrategy, 9,500 from Tesla, 3,500 from NVIDIA, and finally, last but not least, around 15,000 from CYFRF, and move that all into gold at a time when gold was, we added $51,800 every time I go over it, but you'll have to just look straight down there. $51,800 added to the $231,000 that we already had with gold. And I was trying to move it because these things keep popping up. And that brings our grand total to $283,600 worth of GLD. We got another gold right here. That's that third signal. At the time, our portfolio was $433,000. Notice we basically hedged our portfolio. It didn't grow during that time frame, but it also didn't go backwards as some of those other assets were selling off. You can see right here, MicroStrategy is going down during this time frame. If we were looking to look at the other assets like Tesla, like NVIDIA, like CYFRF, they were all likely pulling back a little bit, and gold is going up. So that's why it told us to go into gold. And gold really didn't go up. It just traded sideways. How do I know that? Because we had a total sellable here of $28,100. We're supposed to go into gold at $298, $299, $298, $298. It held its value. Okay, it held its value. So we picked up another 94 shares of gold, added to the 951. We're now at 1,046 almost. That is the third time we went into gold. We sold off $18,600 worth of MicroStrategy, $7,100 worth of Tesla, $900 worth of NVIDIA, and $1,500 worth of CYFRF, picking up our $28,100 worth of gold, added to the $283,600 worth of gold, bringing our grand gold total to $326,000. Then we go into MicroStrategy at a time when MicroStrategy, notice guys, had pulled back. It was up here in the 420, 430 range, and now it's all the way down here in the 360 to 370 range when it's telling us to pick it back up again. This is the last example I'm going to give. I'm just trying to give you an idea of what the model is telling you to do, okay? So on June 2nd, you get a buy signal for MicroStrategy over here, and what do? Well, your total portfolio at the time was $439,000. You have $261,500 worth of sellable assets. You need to go buy MicroStrategy. You're buying MicroStrategy at a time when it's $372 a share. That means you're picking up 700 shares of MicroStrategy. Yes, let's roll. At a time when it's pulled back, you originally had 185 shares. Now you have 887 shares of MicroStrategy. That's June 2nd over here. So we sold off $5,000 worth of Tesla, $229 worth of NVIDIA, $111 worth of CYFRF, and $256,000 worth of gold to fund this $261,500 purchase. Notice it was predominantly gold. Gold hedged when you needed it to. You turned around and took the cash right back out of it, and you bought $261,000 worth of MicroStrategy, added to your $69,000 worth of MicroStrategy, and now your portfolio, congratulations, is $348,000 worth of MicroStrategy, 29.9 or $30,000 worth of Tesla, $6,000 worth of NVIDIA, $69,000 worth of gold, and finally, $32 worth of CYFRF. And I'm just going to go ahead and summarize right now. So what did we do? We did the start date to begin with. We selected 5 assets that we're comfortable holding. In this case, MicroStrategy, Tesla, NVIDIA, gold, and CYFRF. Hopefully from the example, you saw how I used gold as a hedge against the rest of my portfolio. I'm not saying that I think gold is going to outperform Bitcoin over the next 5 years. We all know Bitcoin is going to kick the teeth in on Peter Schiff and his gold. But there are times when you may want to move into gold as tensions rise in the world and things like wars break out or things like rioting breaks out or whatever else, right? When there's that fear in the market, sometimes it's good to have gold as a hedge, to pick up a bunch of it and then be willing to sell it all again at the drop of a hat to move into other things that are going to accelerate more rapidly over time. So we selected our 5 assets, and I gave you the rationale for why I selected each of them. Then we went through and we did price projections, and the way that we did it, remember, we came over here, we used the LILO model, where either A, the price last crossed up through the 200-day moving average, that's where we set this anchor to, or B, we could use a local low. So let's say that it had been a while since, like if we were doing MicroStrategy at a time when the last time it had crossed was all the way back here in September, I might have set it to this point right here where it looked like we had changed direction. Does that make sense? This point right here. Pretend like all the other stuff in the future doesn't exist. And we're at this point right here, and it looks like at this point, it looks like all of a sudden MicroStrategy has started to change direction. I could have chosen that as my point, but why didn't I? Because we did actually come back and retest the 200-day once and a second time. They call that a double bottom. Hopefully you remember that from some of the other things that we talked about in the technical analysis section. Then we came back over here and we did the same thing for each of those. Remember, for Tesla, NVIDIA, gold, and CYFRF, I went based off of where I thought these things would go over the next year based on kind of having an idea of what the LILO looks like. I didn't go use the LILO for each of them, but you could. Or you could just leave it on auto like we did for gold. And then the percent that we want to retain and hold. So at any given time, I want to hold on to 50% of my MicroStrategy, and I'm only willing to sell off 25% of it at any given time. Same thing with Tesla. With NVIDIA, it's 40 and 75%. With gold, I only want to hold 20% at any given time. That's me holding on to it just as a bit of a hedge moving forward, selling off up to 80% at any given time. CYFRF, 10% is all I want to hold at any given time, being willing to sell off up to 90%. We talked about that. We talked about how to set all of these things. And then finally, we went through and showed you how each of these tables are to be used, right? And how we got the results down here when we set up the backtest, but that's just backtest results. How do we actually implement it? We're implementing it here on the summary table and the trade table. It's telling you what you should do at any given time. So the latest signal that we got, just to go through it quickly, our total portfolio was $440,000. It told us that we had $123,000 that was sellable. It told us to move into MicroStrategy. It told us to do that at a time when MicroStrategy was $370 a share. We were holding at the time 333 shares of MicroStrategy. We needed to buy 678 shares of MicroStrategy, bringing our total to 1,011. And over here on the trades graph, we sold off $2.8 thousand worth of Tesla, $15 worth of NVIDIA, $120,300 worth of gold, and $1 worth of CYFRF, bringing our total to $123,200. that we added to $250,700. And our grand total then right now on MicroStrategy would be 250.7 plus 123.2, $373,900 worth of MicroStrategy is what we would be in at that time. Okay, I hope that made sense to you and that you found value in today's video. You can go ahead and go take the quiz now on the rotation model. And thank you for tuning in, and we'll see you next time. Take care.